So last week I told you about how I built a 580,000 dividend portfolio starting with only 2,500 euros. So this week I want to talk about some of the parts that nobody talks about, right? The waiting, the doubt, the moments when everyone around you thinks you're wrong, and maybe yourself even, right? And you have to decide whether to trust the numbers or trust the noise. At the end I'll show you a real position that I hold in my portfolio currently that I've been building over the last weeks. It's a company listed on the Oslo exchange that almost nobody in the English-speaking world has heard of, and exactly why I kept buying it. But first, before we start, let's have a quick disclaimer. Very important, nothing on this channel is financial advice. Everything I share reflects my personal journey and my own investment decisions. I'm not a financial advisor, I'm a health worker. So always do your own research before making any investment decisions. Past performance does not guarantee future results. Okay, so from now on I will be updating my portfolio to you guys on the videos. So before we get into it, I want to thank everybody that has subscribed and shared the channel. It means a lot to me that more people find this content, right? So if you're finding value here, hit the like button and hopefully also in the video. It genuinely helps. So let me walk you through this week's portfolio update. So no buys this week, no sells, no dividends received. It's a very short week because of Easter. The Norwegian market is closed since Wednesday half the day, from around 12 o'clock or 1 o'clock, something like that. So it's a good week just to relax and think about things. Here are the numbers on the portfolio that matter. So dividends received so far this year, approximately 17,100 euros. Total dividends collected since I started in 2020, approximately 235,200 euros. Depends a bit on the currency conversion, right? Cash available and ready to deploy, approximately 24,500 euros, ready to buy new stuff or current positions. So the portfolio is fully public, every position, every allocation, updated in real time. The link is down here in the description. So now let me talk about what I've spent this week thinking about instead of trading. And like the hardest part about dividend investing is like, I kind of want to go back to something that I mentioned last week, the MPCC trade. I kind of sold everything I owned, every single position, and went all in one shipping stock. And then I waited for months. The stock didn't move, it even dipped a little bit. And people around me thought that I lost my mind. I also thought I lost my mind because it was everything I had. But that period, the waiting, was like the hardest part, right? Not the analysis itself, because I was pretty sure about it. So not finding the stock, but sitting still. And because here's what nobody prepares you for when you start this. When you make a big conviction-based decision, the market doesn't immediately tell you that you're right. It often tells you the opposite. The price goes sideways or down, and every day it does. A little voice like the little demon on your shoulder says, maybe you got it wrong. And most investors, unfortunately, give in to that voice. They sell, they take the loss or a small gain, right? And then they watch the stock do exactly what they thought it would do without them. I've done that too, right? So the very first pick that I had, that if you guys remember from last video, was Wallenius Wilhelmsen, a car carrying company. I sold too early, and I was right about the stock, but I was wrong about myself. And this was for me a turning point where I learned really that I invested so much time in it. I knew the basics and the company pretty well, and I bought the stock. I sold it at a 10% loss, and the stock has gone more than 100 times, right? Plus it paid immense amount of dividends. So I lost that train. I have them back in my portfolio, by the way, but I could have owned it earlier. However, so this is kind of what this video is based about, right? So the real skill in dividend investing is not finding the right company, but it's staying in it long enough to collect what it owes you, basically. So the dividend doesn't care how you're feeling on Tuesday, on Wednesday, on Thursday. It comes when it comes, right? And if you've done your homework, it keeps coming. And there's a concept I come back a lot to, the difference between price and value. So price is what the market thinks right now, values what the company is actually worth based on cash flow, contracts, and earnings power, right? So price and value are almost never the same, and the gap between them, the gap is where the opportunity lies. So the hard part is trusting that gap when the price is moving against you. That's where most investors lose, not to bad analysis, but to bad psychology, right? So my entire portfolio is listed on the Oslo Stock Exchange. And if you never heard of it, that's exactly my point, right? So Oslo Stock Exchange is dominated by sectors that many American and British markets barely touch. Shipping, offshore energy, seafood, some industrials, right? So companies that move oil, carry cars across the oceans, harvest salmon, and drill for energy in the seas, right? So these are like real businesses with real assets and real cash flows. And because the English-speaking investment world largely ignores them, they're often priced at a discount to what they're actually worth, right? And I'm not smarter than Wall Street, but I'm looking in a different place, right? Sometimes that's enough. The other thing about the Oslo Exchange is the dividend culture. Many of these companies are built around returning cash to shareholders, not just stock buybacks, and definitely not vague promises, but actually money in your account every quarter. And I would actually dare to say that the dividend yield in the Oslo Exchange is probably one of the highest in the world. So if the Norwegian krone wouldn't be so bad as it is at the moment, it will actually be pretty decent. But for you guys that are buying in dollars or euros, you will get more out of it than I do. So that's like the environment I operate in, and that's where I found the company I want to talk about next. And that is SED Energy Holdings. And let me show you then the example from my portfolio, right? So this is not a recommendation, it's like a walkthrough of how I think. So the company is SED Energy Holdings, listed in Oslo. Check here the ticker because it's not SED. And it's like an offshore service company. They provide vessels and equipment that support oil and gas operations at sea. Earlier this year, a large institutional investor sold a significant stake and the stock dropped. And the reaction from most investors was like, something must be wrong, right? But my reaction was different. I've been through these guys selling themselves down in other companies, and it's just how they work, right? They invest early, especially when the companies need substantial help, and then comes the turnaround case, and then they made their money, they move on. And that's perfectly fine. There's nothing wrong with the company most of the times, but you have to check, right? But I already had analyzed this company. I was following it, and I knew that that large institutional sale often have nothing to do with the company itself, as I explained, right? They're like, it's about cycles, mandate changes, capital reallocation, and it's the funds problem, not the company. So I looked at the numbers again, and they still held up. So basically, SED Energy Holdings revenue from 2025 financials, $212 million, adjusted EBITDA, $110 million, net debt EBITDA, it's like 0.4x. That's pretty low for offshore, if you guys don't know about it. Distribution to shareholders, $82.5 million. The backlog, that means the contracts they have on their vessels or rigs, is of $466 million, so it's you have good visibility. And the fleet status is like fully operational working. There is everything is creating value. So low leverage, full fleet working, $466 million dollars in backlog. That's like future contract revenue already on the books. And they are paying out $82.5 million dollars to the shareholders. So I bought, and it's not because it looked very cheap, but the fundamentals didn't change. Only the price had changed, right? So I've built a position of about 40,000 shares, and every quarter SED will be paying me for it. But there's risks you must know. Offshore is cyclical, right? Markets turn, the contracts, what happens if they expire? And especially many of these companies, shipping, offshore, whatever, they have some sort of debt, right? So there can be a problem. And I'm not talking about SED in general, but all the market, right? So there's always risk, but I've sized my position accordingly to the risk I see, and I understand what I own. And I will tell you also very quickly about my positions, how they are. inserted into the portfolio, because I don't buy something that will be too dominant, right? I want to have this like more like a fund or an ETF for you guys to understand. So I want my positions to stay at a position at a size of about 3 to 7, 8% in the portfolio. So it can tolerate that some sectors or some companies go a bit worse from time to time, especially the cyclical ones that go up and down, right? So that's the psychology of it. So when the institutional investors sold in SED and the price dropped, I didn't panic. I had the analysis, I had the conviction, and I bought more basically. So that's what I mean when I say that discipline over FOMO. Not chasing the stocks that are already up. I'm buying the ones that are temporarily out of favor. And when you've done the work to know why they shouldn't be, right? So I'll keep you updating you guys about SED and other stocks, how they develop in my portfolio. So the market, it's very important to understand that the market rewards patience and not perfection. So here you go, guys. My name is Hugo. This is the dividend journey. It started with €2,500 and a boat that I never bought. See you next week.